Welcome to Careers Takeoff, where you learn the latest about how you can get ahead in your career. I'm your host, Conrad Chua. Welcome to this episode of Careers Takeoff. I'm Conrad Chua, and it's great to see everyone again. Before we get started, new to the show, I want to remind you to put your questions in the comments field, whether you're watching us on LinkedIn, YouTube, or Facebook. You can start by writing down where in the world you're watching this from today. Now, our guest today is Oremeyi Adeola, currently success officer at Interswitch. Oremeyi has spent almost 20 years with Nigeria's Interswitch, who's a pioneer in the Fintech industry in Africa and Africa's first tech unicorn. So it gives me great pleasure to welcome you, Oremeyi.
Thank you, Conrad. Hello, everyone. It's great to be here.
Yeah. So, Oremeyi, can you start by saying a bit about what is like the fintech industry like in Africa? And for viewers, right, I'll just put up this chart that shows the big rise of African fintech, and this comes from McKinsey Global Institute report. But yeah, Oremeyi, what is the fintech market like in Africa?
Right. So again, thanks for having me, Conrad. It's always great to connect with the George Business School. It's always great to contribute value to the business school. So just saying, fintechs are really at the heart of Africa's tech boom. When you consider that you have almost half of the 52 tech startups in Africa are predominantly one form of fintech or the other, and when you also juxtapose that with the continued influx of funding from across the world into Africa's budding fintech industry, it does provide further proof to the fact that the industry does hold very high potential. So when you look, but one thing you must consider when we talk about Africa, we always say this: Africa is not a country, it's a continent. So you have different regions, different corridors. West Africa is very different to South Africa, to East Africa, and of course, Northern Africa. When you consider across Africa, you have different corridors that are leading this growth. So, of course, you have the West African corridor, where you have Nigeria, of course, the largest, most populous country, and leading growth across the continent. But in West Africa, Nigeria definitely stands out. In recent times, Ghana and the Francophone West African countries, so when you talk of Cameroon and Cote d'Ivoire, they do stand out as well, actually showing higher growth, just like McKinsey did confirm in the chart you have up. Then when you look at Southern Africa has always been a lot more mature and ahead. Not just talking of South Africa as a country, but Southern Africa as a whole, So there is definitely growth there, but it's different to what you have in the West Africa, because those two corridors are different places of growth. And then, of course, you go to the East and you're talking of Kenya, you're talking of Uganda, you're talking of Tanzania, that are seeing different levels of growth in different kind of products and services. And then in Northern Africa, we have Egypt, that again is quite a mature market, but is still very much leading in the growth space. And you also have countries like Morocco that are coming up quite strongly. So basically, what you see across Africa is revolutionizing the payment space. And really, it's about digitizing services. So it always starts with digitizing banking solutions, but it has gone way beyond that. In Nigeria, for example, we've gone way beyond digitizing just banking. We're digitizing healthcare. Recently, we launched just this week a platform that digitizes and aggregates transportation service providers. So we're digitizing transportation, education, retail. At the back of all this is payments, but at the front is the services to the consumer. Now, in saying all this, we must not forget, of course, that still at this point, over 80% of the economy across Africa is still highly cash driven, and the financial exclusion rates are still very high, surpassing 50%. So we do have our work cut out for us, definitely. But there is growth, It's exciting, and there's a lot going on.
Thanks very much, Oremeyi, and I'd love to talk more about what these sort of services look like in different parts of Africa as compared to in the West, where if you say it's digital wallets, we're thinking, okay, I'm just mapping my credit card into an app on a expensive smartphone, etc. But before we do that, wanted to give a shout out to some of our viewers today. So we have Aaron, who's watching us from Surrey in England. Hi, Aaron.
Hi, Aaron.
Abdul from Guinea.
Conakry. Hi, Abdul.
Masego from South Africa.
Hello, Masego.
We have, and then we've got people watching outside of Africa. We've got Paget from
Hi, Paget.
from Australia.
Hello.
So it must be really late where you are. So thanks very much for joining us.
Yeah.
Juan Pablo from Lima. That must be quite early for you.
Hi, Juan.
Boniface from Kenya.
Hello, Boniface.
We've got Vir from Tokyo. Must be quite late as well.
Thank you for joining us, Vir.
Vana from India. Hulaimat from the UK. So
Hi,
thanks everyone for coming in. And we've got someone from someone from Interswitch. I don't know.
Hi, Tommy, my colleague. Yes, that's my colleague.
Yes.
Tommy, thank you so much.
Yeah. And we've already got one question from the chat. We'll come to Gordon's question later about, I think it's more about the Interswitch story, right? Which we can come to later. But before that, maybe if you talk a bit more about what's the difference, right, between what we are used to about fintech in the West and what you see in those major parts of Africa that you mentioned.
All right. Thank you, Conrad. Now, so there are several factors that definitely differentiate the African fintech industry from the fintech in the West. Now, a key differentiating factors, two things I'll say are key differentiating factors. One, the customer or consumer profile. We are dealing with two different sets of people, two different mindsets, two different backgrounds and ideology. And so you must, of course, factor that in. But another thing is what I call infrastructural realities. The fact that so just to be more specific, while the consumer, when we talked of consumer, the Western consumer is looking at, like you said, how can I add my existing credit card? So I have a credit card, I have a credit rating, there's data available, I can always check my credit score. So data is available, the data is aggregated, the data is easily accessible. So that is what I meant by infrastructure realities. Now, a lot of that does not exist in a wholesome way across African regions. So while the Western consumer is really seeking increased convenience, smarter access, the African consumer is looking to fintechs to even solve basic challenges like connectivity. Right. Another thing is the average Western consumer is largely comfortable, and very used to technology, while and the African consumer, like I mentioned, considering again that Africa is not a country, it's a continent. So this, of course, varies as you go from region to region. But the level of exposure based on mobile penetration, financial inclusion, and financial awareness is something that you have to deal with. So that's not really a challenge in the West, but in Africa, you have to understand that you are dealing with people that you are dealing with service. You're dealing with consumers where you have to bridge this gap. So access in the West is a norm. In Africa, you have to basically build it yourself. Let's consider regulatory perspective. So in Africa, from the African perspective, the legislating teams or institutions basically have to legislate on the go, right? Like I recall when we started Interswitch about 20 years ago, a lot of framework that are in today regulating payments and fintech were not available. So we had to work with the regulator, co-create this on the go, right? While in the West, a lot of this is usually already in place and has been in place for quite a while. In the same vein, most African economies, when you consider maybe some volatility with respect to the financial economies, this does play a major role, in the fintech space, because the fintech and fintech and payments go hand in hand with the economic space. So volatility in economies will affect fintech. So those are some of the major differences. So in summary, African fintech definitely have their, as I said before, they have their work cut out for them. But I'll always say this: don't get it wrong. The African consumer will not be left behind. Even though all these gaps exist, the African consumer is very clear on what they want. They are very specific on what they want. They demand more and they want value. So that's what I'll say. So on that front, the African consumer wanting more, I'll say that's a similarity. But on the other things, there's a major differences.
Yeah, and I think, Orme, this is a good time to talk about in the Interswitch story, because I remember when I first met you, was it more than 10 years ago now, when you joined the MBA, you were telling me about how Interswitch had to really build almost I would say the part of that financial plumbing that we tend to take for granted in the West, and we never even think about it. It's just completely, transparent to us. But that was something that you had to do, that Interswitch had to do, and that really helped in the sort of adoption. And maybe if you can also touch a bit from that. That's the starting point. But I think Gordon from the UK, his question was more about, as the journey went, how did Interswitch grow? Did it have to get funding at some point? And when did you get funding?
All right. So the Interswitch story is very close to my heart. I'm sure you can imagine that. Um, so, like you said, was clearly, so we have, our purpose is to inspire Africa to greatness. We are convinced, we are committed to the fact that Africa deserves more. And we are also very focused and committed to the fact that it will take us, Africans, to solve African problems. So we decided to rise to the task. So, like you said, 20 years ago, the landscape was virgin. So we're talking of payment cards. Today, we're talking of having your card linked to your mobile phone. But I'm talking of a situation where cards were almost non-existent. There were just a few cards in the hand of a few elite and privileged people. So definitely not a solution that was scaling. So we had to, as you said, we started by building our first free 5 years, say 5 to 7 years, was really I'll call it laying the cables, building the infrastructure. So it was, you want a shared infrastructure, you want to be able to connect. So Interswitch is about interconnect, interconnection, transactions going between one entity to the other. But there's no way we can communicate or transact with each other if we are not connected. That connection did not exist. So we literally had to build it out. And when I say build it out, I mean build it out. So physically connect entities. So we started, of course, with the biggest financial service providers, and we started going, and well, with some working with regulation, taking advantage of some consolidation exercise that happened, we're able to connect get 100% of all the major financial institutions. Then our focus was just Nigeria. Now that the infrastructure was laid, the basic things could run, basic services, simple things like a debit card connected to an account, and a customer can withdraw cash. Fantastic. Then, of course, when that was now in place, we started saying, what else can we layer on this? What other channels? So we went to the POS channel, the point of sale channel, the web channel, the mobile channel, which is a different story on its own, because even then there were no smartphones, right? But there were mobile phones. So what kind of services at that time could mobile take advantage of? So bringing mobile in as a channel. And I always like to stop just a bit to say this. People always say, how can we compete with cash? We never really saw cash as a competition. We saw cash as a collaborator and a partner. And that was what helped us even start to innovate on channels that people before ignored. Things like the bank branch, where customers will always go in to pay cash in. Instead of fighting and saying, no, don't go to a bank branch, go to a terminal. that would have been a waste of time. So we collaborated, we partnered with financial service providers, and the bank branch became a digital channel for us as well. And today it's one of our largest, serving especially government and large conglomerates in Nigeria, and that solution is also scaling across. So I'm trying to say we started by building that infrastructure, then digitize. We now went on in the next phase. We saw ourselves as digitizing industries. So we did the financial space. We then said, oh, what can we do for revenue collection, say in the oil and gas space, in the airline space. So for example, if I want to buy airtime on my mobile phone 10 years or even 15 to 10 years ago, I will have to buy a scratch card and enter the PIN manually. How can we digitize that? How can we automate that? So working with the telcos, we worked with airlines to automate ticket booking. So I book my ticket, I can pay on any channel, on the ATM, on the web, automatically. There's a live and direct connection to the airline's back end system, and my ticket is issued. And today that solution is still running and is still very much providing services. 1 minute, my system locked me out. Let me
Oh
just
no,
log
you're
back.
fine. You're fine.
Oh, great. Okay, great.
Yeah.
Okay. Let me just log back in so it helps when I'm watching you as well. Okay, great. I'm back. So speaking on that, so we went from building the infrastructure to digitizing right now, and then now we're talking of enabling ecosystems and driving growth. So we are taking that enablement we've done, that digitizing across industries, and now we are scaling it across. We've gone out of Africa. I mean, we went out of Nigeria years ago. I believe this was much more than about 12 years ago. We are in Kenya, we are in Uganda. We have customers, not just, I mean, we have operating bases in these countries, but we have customers across over 17 to 19 African countries, because the solutions, different solutions are relevant in different places. So we have basically facilitated the exchange of value and businesses for businesses and consumers alike. We have flagship products like QuickTeller, which was the foremost digital payment platform in Nigeria. We have Verve, which is our sweetheart, the premier African payment card that is accepted across 185 countries in partnership with Diners Club and Discover. We have Verve alone has over 35 million cards and 50 million tokens in circulation. We're very proud of Verve because it's not just issued in Nigeria, it's issued in several African countries, So that's the Interswitch story. And right now, this year, we are 20, and we just launched a Never Stop campaign where we are saying never stop innovating, never stop growing, never stop driving value. There was a question on funding, and I'll say funding wise, I mean, partnerships has changed over time. A lot of information is available on the internet. We have had private equity come in, bring in some funds and enable us to even grow further. So funding has come in at the right time. That's what I'll say.
And would you say that investor interest in fintech in Interswitch, when did that come in? Was at what point, rather than a year? Was it when Interswitch had built that infrastructure? Was it when it was gaining customers or users, or when it was expanding out of its home market in Nigeria? So where was the point where suddenly investors were thinking, hey, this is something that's really got legs, and we want to partner with this company and help it grow?
Okay, so I'll say when investors will always be attracted to growth. And we when we started growing, even though, I mean, of course, the growth rate may not have been so phenomenal at the beginning, but considering the opportunity and what we were challenging ourselves to do, investors will always typically, I mean, I can't remember so far back, but I'll say investors would typically have always been attracted to the Interswitch story. Why? One, it is a true story. It's a story of organic growth, typically. It's a story of the daring to do. And so that definitely is something that investors like, where you are growing in a green field and you are not stopping, you are still going. If you look at our pipeline and the things that we constantly challenge ourselves to have done over the years, it's very clear that growth is inevitable. So I'll say that investor interest will have, I mean, started quite early and has grown over the years. I mean, at certain points, when we were done with a phase, investor interest was there. As we go into the next phase, up till now, there's still very much investor interest. That's what I'll say.
And Gordon's got lots of Nigerian friends, he says, and he understands a lot of the challenges that you mentioned. We have a question here from Masego, and I think it's an area which I know you are very passionate about, and that's inclusion, right?
Okay.
So Maseko's question is, what's your perspective on fintech for women in Africa? Where do you see the problems in getting more women involved in the ecosystem? And what do you believe will be the kind of inflection or trigger points to increase participation of women in the ecosystem?
All right. So I'll address that by saying the general issue of getting people involved in the ecosystem. So there's a general issue. It's not just, I mean, yes, there's for women, but there's a general issue. And we believe if we solve, because women are 50% of the market, of the population, men are about 50% as well. So if we focus on solving that in the issue generally, we will be able to get more people, men and women in. But of course, we know that women do, I mean, from research, it does make business sense to give women some attention when it comes to services and solutions. So, I mean, that focus is definitely there. So let me give some information. When you look at the state of financial inclusion, which is driven by one, lack of proper education, lack of proper access to infrastructure, limited access of consumer data, poor mechanisms for identity verification, low adoption of, say, mobile wallet, internet penetration is growing, definitely. But when you consider the areas that really suffer from low financial inclusion, then you always see a correlation with low internet penetration as well. There's also the issue of education. So a lot of people that, I mean, lack of education does lead to the fear of fraud. Fraud is real, but then fraud is combated through knowledge. But if that knowledge is not available, what will take the place of knowledge is fear. So that fear is definitely something that holds a lot of people back. So those are basic things that must be overcome for Africa's fintech space to grow. And working, of course, with the regulators to make sure the right regulation is in place. Now, as those infrastructure issues are dealt with, then service providers can now start to have specific solutions for different consumer classes, including women. So women, a lot of women are bringing in funds for their families, breadwinners. So you're looking at funding for small businesses. Microfunding definitely goes a long way to help women. A lot of data out there does support that women are quite credit worthy, and when you give loans to women in groups, they tend to support each other to pay back. So that those kind of solutions will go a long way. But these infrastructure issues I mentioned initially must be overcome to some degree for you to scale. Now, consider that in Africa, the average revenue per user is quite low. So for solutions, even whether it's targeted at women or at men, for solutions to make sense and to be sustainable, they must definitely be dealing on scale. And if infrastructure issues are not dealt with, it will be difficult for any solution to scale. So for women solutions, just to respond directly to the question that was asked, I'll say that as the infrastructure issues are being dealt with, service providers now have the luxury of being able to provide relevant, I don't want to use the word sophisticated, I'll say relevant, useful solutions specific to a targeted group, say women, that will go a long way, that will be sustainable, will be value adding, and will definitely, at the end of the day, turn the numbers that we want to turn in. indeed we'll see a growth in financial inclusion. But first, infrastructure issues must be dealt with holistically. And that's why where you see a lot of fintechs playing, trying to fix one area or the other of the gap.
That's great, Oremeyi. And actually, I wanted to ask you a bit about how um, in a continent or where you have markets where, as you say, people don't have that knowledge. How do you impart that knowledge? And I'm thinking about the live stream we did last week with Stephen Lau, who was looking at how to combat fake news and disinformation in the developing world, where he said there's literacy is not very high, and that's why he said things like video become more important. But I think that user education and adoption, if you could talk a bit about that. But before this, I wanted to show, I think Masego, who asked the question, she says that they want, again, this thing about having awareness for women to work in that industry is, she feels is very important. They've set up a fellowship. I'm just going to put that up there here.
Yeah, I just saw it.
womenfintechafrica.com.
It's great, Mosego. Just to say, yeah, there are a number of groups like this. So I'm a member of Women in Tech in Africa. I'm a member of today. I think right now, WIMA, which is Women in Management in Africa. There are conversations like this going on. There's a lot of focus, women coming together. Last week I was in London, and we met 100 women at Davos. We met and we're talking about leadership, women in leadership spaces, in management. Now, of course, the awareness and the consciousness that women are very critical in the ecosystem, in any ecosystem, is something that a lot of people now agree with. I don't think there's a lot of argument anymore. Now, the question is, how do you therefore take that information and do something with it? So like Musego mentioned, or like you mentioned, Conrad, not just, providing solutions to women, encouraging women to play in this fintech space. And then it goes back to girls education. So there's, for example, I met with, I can't remember the name of the organization, but they are driving 10 million girls in STEM in Africa, where they are ensuring women and girls are getting exposure to STEM careers from a very early age. So that way, as they grow, they will not be discouraged. So I think at the end of the day, all these efforts will culminate to a more empowered population, women and men, a more enlightened population, in the boardroom, in the marketplace, and wherever.
Or me, I wanted to ask you actually, you mentioned how the average revenue per user in large parts of Africa is quite low, and hence scale is very important. But why do you think fintech companies are trying to solve this very difficult problem of getting that average, reaching out to the users who, are not going to spend very much? Why don't they just go for the smaller numbers of very sophisticated users who's going to pay, and basically use copy and paste solutions from the West? Why do you see fintechs in Africa going for this very difficult market, piece of the market?
I'll say the truth is, of course, every business has its strategy. So you can, I learned this in Cambridge during my MBA, with Hadida, our strategy teacher. You have to segment your market. And there will always be the 1% that's the high net worth individuals that will give you, huge revenue, huge income from a very small base. But then there will be the larger part. Now, when you segment the typical African market and you look at the pyramid of consumers, the high net worth to the middle class will possibly be maybe no more than 12%. So you are left with 88%. And you as a business has to say, hey, do I want to just build my solution for 12%, of which 12% is not guaranteed? Because I assure you, there's a red ocean of competition there. Or do I want to just focus on the 88%? And that also brings us to the issue of ethics in business. Are you in business just for profit? Or are you in business because you are committed to a cause? I mentioned the purpose of Interswitch. We have a vision, and our vision is a prosperous Africa. A prosperous Africa driven by value exchange, commerce, and innovation. We are committed to the fact that Africa must prosper. And we are the ones to put the enabling factors in place to make that happen. So if you are committed to a genuine cause and you're not just in business for the numbers, then I will say focusing on only the people that can pay you is not an option, because business solutions for us is beyond a job, is beyond just having some nice numbers and some money in the bank account. It's really about the ability to wake up in the morning with a smile, where you know that indeed your daily work is making life better for tons of people out there that may never ever know you, but you are making life better for them. I always give this story, and I'll just wrap up that question, the response to that question, with this. When I was 17, 18, right? So about 20 years ago, 20 plus, my mom will say, "You are going to the bank for me and you're finished. You know, you're going to spend 4 hours on a queue trying to withdraw a very small amount of money." Why? Because everything was manual. You go to the bank, you have to line up, you have to get a tally number. I don't know if you ever saw that, Conrad. You have to get a tally number. They have to go through this massive ledger because there was no infrastructure, there was no technology enabling it. And you have to go through this massive ledger and check your balance, confirm. And you have to go to your branch. You can't go to another bank branch because your data was not available across. But I think of it today that I'm sitting here, I'm in the UK presently, and I can do transactions from my bank account or my mobile phone. I can send funds to somebody because the person needs help. I can pay my children's lesson teacher. I can do that. It saves me time, it saves me money, it enables the other person to get money faster. For me, nothing can take that away. That is adding value. So it's not just about focusing on the people that can pay you today. It's about being genuine about why are you in business. And that's why I said it is a question of ethics.
Very great, Oremeyi. And I think going on to the more about financial inclusion, this is not really a question per se, but Paget from Australia says, he works with Ag Unity, a fintech for smallholder farmers in
Fantastic.
Ethiopia and soon Kenya. So can you talk a bit about what are the fintech solutions for agriculture, given there's a lot of these small farmers in various parts of Africa? What are the challenges that they face, and what's the fintech industry trying to do to solve that or help them?
Oh, hi, Paget. I'm so excited because I think this was just like about not about a year plus ago. We celebrated with our Kenyan office. Why? Because they are the SACCOs, and I'm sure Paget, you've heard of them. The SACCOs are the like microfinance group of people, of farmers actually, and we were able to issue to them through our Interswitch Kenyan office, working with one or two SACCO financial service providers, issue them VEV cards, and they were so excited. Why? Because it was the first time they were getting cards, payment cards. They were able to access their funds from their remote villages, and it was such a huge celebration. And I mean, I know this is a bit of a digression, but during one of our management meetings, we actually, just use that to reflect on the fact that this vision to prosper, enable Africa to prosper, is coming alive small in bit by bit. And so I'm just saying that's always a very refreshing memory in my mind. And when you mention fintech, you mentioned small farmers, indeed. So some of the infrastructure, some of the solutions that are relevant to farm agriculture, especially small scale ones, are being able, I'll call it aggregation. helping them collaborate, but on our own, when you stand alone, you can't do so much. But when you are a team, you can do a lot more. Of course, we know that. So what technology is helping small farmers do in areas I have seen, I don't have so much experience in agriculture, but in some areas I've seen, is helping them aggregate information, share knowledge, so they're able to, through some form of infrastructure, be able to share information on things like weather, seed type, etc. But the end game is to better their harvest. Now, when the harvest is in, being able to aggregate all that and being able to help them, because they've come together, they are a more formidable force. They are better able to negotiate for sales with bigger, so they can now sell to retail chains that they could not have done on their own. But because there's an aggregation model in place, they are able to sell to larger retail chains, or retail chains have a better negotiation. They are able to move their goods in bulk out of the rural areas to the more urbanized areas. Now, in all of this, you don't see payments, but there must be payment at the end of the day. And that's why I said digitizing the ecosystem. If all you are out for is to make money, you won't go far. But if you are out to indeed better the lives, you will be able to. So in fintech, something we're doing in Nigeria, not with agriculture, is with another industry. We are digitizing everything for the consumer, from when the consumer wants to board a bus, to when he buys a ticket, to eventually when he chooses his time for travel, to when he eventually pays. We are not just coming in at the payments phase. We are thinking across the whole customer journey, across. And that is what I believe, for Ag Unity, I believe they would do the same, because that's the only way you can scale solutions in Africa. Like I said, the infrastructure deficit is real. So if you want to provide sustainable solutions in fintech, understand that fintech is not is not an end in itself. It's a means to an end. You must ensure you embed it rightly in the flow, so it is indeed providing relevant solution. So I hope that's helped.
Thanks very much, Oremeyi. And I just, Paget's just shared the URL for Ag
Yes, I can
Unity.
see that. I'm going there right now. Paget will connect on LinkedIn. So nice to meet you.
But one thing I'm quite interested here is that Paget's Ag Unity talks about the use of blockchain, and in terms of as part of the solution to consumers. And again, going back to this McKinsey report, it showed blockchain crypto as being one of the big sort of driver, or seeing big growth rates in fintech. Do you see that as real part of that solution, blockchain and crypto?
So I'll say, like I mentioned earlier, I said the African consumer demands more. Now, because of the infrastructure deficit, nobody's going to wait for you for 20 years to build infrastructure. You have to, there's this term that I don't like using, but you have to leapfrog. And blockchain enables us do that quite well in some critical areas. It enables players. So, I don't know exactly how Ag Unity is using it, but I'm very sure they'll be doing things like authentication. They'll be doing things like ensuring that ownership is not lost across the value chain, so that payment, and then, of course, enabling faster payments in a decentralized manner, reducing the middlemen and ensuring that value that gets to the the man at the end is a lot higher, because you've cut out a number of middlemen. So those are kind of gaps that blockchain technology, when rightly applied, helps us to those are some of the challenges it helps us to overcome and leap over in Africa. So you see a lot of application for the blockchain technology in payments, and for payments is very big on and payments now being decentralized, so that you can deal person to person in a level that you could not have done before. When it comes to things like tangible goods like agriculture. People are more conscious now to say, how do I ensure when I'm paying for coffee, I'm paying for cocoa, I'm paying for whatever agricultural product, it's the farmer is actually getting those funds, and it's not going to some body somewhere, and then the farmer gets 0 point something percent of what he should have gotten. Blockchain enables that because of authentication, the authentication infrastructure that can be built on it. So I'll say that indeed there is a lot of opportunity for blockchain. There's a lot of noise of blockchain in the air, but I mean, and solutions are coming up, and the future is bright. But I'll say there's a lot of work. The work to be done is a lot more than the noise going on. So I'll say for blockchain, we need to make sure we keep getting our hands dirty, keep focusing on real value, not get distracted by the buzz and the noise, because in a few years, what will be standing is real value that was delivered. But I do agree that blockchain and crypto have a lot of potential and opportunities here in Africa.
Wow, great stuff, Oremeyi. And I know you mentioned this thing that Africa is not homogeneous, is not uniform, and there's many different kinds of factors, right, that determine the markets in different countries. But Veer is asking whether, in a way, is fintech in Africa experiencing similar challenges to what happened in India or China? And is there lessons or ideas that fintechs in Africa could pick up?
Okay, so yeah, of course there are similarities. One major similarity, if I talk of the payment space, is if you look at China. China has China Union Pay, which is their own card brand. India has something like RuPay. I'm not sure of the RuPay numbers and how much penetration it has in the market. But we in Africa, I mean, that was one of the reasons, not one of the, we do, one of the motivations when we launched Verve about 10 years ago. Today in Nigeria, we have the leading market share for domestic cards. Now, that's just one area, because the solution domestic card brands provide to service providers, the fact that you can do transactions up to settlement in your domestic currency, right? So you are not exposed to fluctuation you don't have to start dealing with dollars or forex, which a lot of small to medium entities cannot even afford to do when you look at the base that they are coming from. So that's definitely some similarity. However, when you consider regulation in countries like China, it's very different to Africa. Like I said, China is almost a continent and a country on its own. It's in Asia, but it's massive. They're dealing 1.3 billion people. So the regulators, any regulation will affect the 1.3 million people equally. In Africa, you are dealing with 53 countries, 53 regulators, likely very different. So what has worked in Nigeria and the regulator has moved forward, in Kenya, the regulator may not be at that pace. So definitely there are things to learn, but we must always recognize that we must compare apples with apples and not apples with oranges when you talk of Africa and China and India.
And at this point, I wanted to make a plug actually for something that we are doing in the Judge Business School. We have a Cambridge Center for Alternative Finance, and they do a global alternative finance market benchmarking report. So I put the QR code if anyone wants to go and take a look. But it looks at the various issues that you mentioned, Oremeyi, which is the different parts, different regions where the markets are developing, what are some of the key challenges that different regions are facing, and how are regulators approaching those sort of issues. So for those who are interested, please take a look there. And it's quite a nice thing to go into. Maybe this might be our last question from Justin, who is a long-time viewer. And Justin's from Sri Lanka, or watching from Sri Lanka, and is asking about the role of regulators, specifically in terms of encouraging financial inclusion.
Okay, so regulators are very critical. Now, of course, it depends on the space you are dealing in. But in Africa, in Nigeria, for example, regulators are very key. We are lucky to have quite an open regulator, quite agile, always ready to collaborate, ready to discuss, and have, I mean, roundtable conversations so we can co-create and move forward together. But I will say that regulation has a lot to play when it comes to financial inclusion, from just things like um, G to P payments, government to people payments, people to government payments. How are taxes remitted? How are citizen benefits granted? Regulators can actually put in place certain frameworks that ensure that you must be come into the formal financial um, space for you to access some of these benefits, and that will be a motivator for financial inclusion. In addition, in Nigeria, for example, a few years ago, the regulator introduced what we call a bank verification number that just ensured that everyone had to get registered if you wanted to keep operating your bank account. Today, if you want to open a bank account, you must have a BVN. Now, what the BVN does, it feeds into a central database it feeds into a central database that acts as a point of authentication for other services to plug into. We talked of the infrastructure deficit. We talked of the fact that data is not readily available. But here we see the regulator driving that, trying to close that gap with that regulation that has been created. It may not have achieved all the things it set out to achieve just yet, but we are definitely on the right path. So I'll say for sure, regulators and regulation has a key role to play when it comes to financial inclusion. A key role to play, but the regulator must be educated. The private sector should proactively engage regulation in the different countries to ensure that the regulator is aware and they can co-create policies that will be good for business, good for the people, and at the end of the day, good for the economy. And I'll say that.
But thank you so much for Oremeyi for that. That was very useful, very good. I hope that people would find what she said insightful and inspirational. And hopefully people can think about joining the various opportunities in the fintech market in Africa. Now, the next episode will be in 1 week's time, this 7th of October, Friday. And we'll be having our very own Thomas Roulet, who teaches on the MBA here. He's going to be talking about the power of being divisive, his book. Basically, why do good people work for companies with bad reputations? And it'll be a very first for this channel because we'll be having a giveaway. We'll be giving his book, a copy of his book. All right, so please come on to that and join us there. So other than that, it leaves me very much to say thank you so much, Oremeyi. You've been such an inspiration, and I really hope that I'm sure you're inspiring many people to join you and the others who are trying to put together so much in the fintech industry in Africa for not just for profit, but also for social good.
Fantastic. Thank you, Conrad. Thank you for the opportunity. Thank you.